TLT stock, the ETF for the US Treasury 20 plus, popping around a little bit. I've been selling calls against TLT stock. Didn't step in and buy puts on those, a risk reversal on those moves that we saw off of inflation and other economic data numbers we saw over the past couple weeks. How am I playing TLT stock moving forward? Now, I'm a very short-term trader when I trade options. The bigger trend had been since October with the bond yields selling off. TLT stock has been rallying. But in between those rallies, what I've been doing is stepping in and selling calls the day or two before we get economic data. The objective is let those calls sell lower because I expected economic data to continue to show up a lot stronger than the market hopes. And I've been profitable on those trades. Some of my recent videos, you certainly have seen that. I am a very short-term trader. Now, the way I see TLT stock, we're probably about where the 10-year Treasury yield is going to sit for probably a good month or so, maybe 2 to 4 to 6 weeks. So I'm probably going to step in and sell some puts with the idea that if we see a sell-off in, say, SPY stock, S&P 500, the SPY stock being the ETF against the S&P 500, if we see selling there, there will be a flight to quality which would push TLT stock upward. Given that, stepping in, selling puts would be a bet that I think probably I would succeed at. But again, short-term trades. I step in a day or two before a major economic release because I believe that the market has it all wrong. And while bond yields have shifted, we're probably going to see higher yields for longer, and no one really wants to believe that. Let's jump in and I'll show you some of the charts I'm looking at. Here's a look at TLT stock itself. And as I said, I've been selling some calls into the moves we saw upward. Sure enough, they played out just fine. But where does TLT stock go from here? I wanted to kind of break down some of the economic data that I'm looking at to show what I think is probably going to happen with this economy. Eventually, the long term, I expect TLT stock will go lower. But I think I'm going to front run this and sell some puts. We have tomorrow, we get NVIDIA stock is going to be released, their financial earnings. And I expect it's not going to be overwhelmingly awesome. Because of that, the stock market itself, SPY stock, could easily sell off. There will be a flight to quality. This could push TLT stock back upward. All the way out to June already. People were dead sure that we'd see a rate cut in March. Then they pushed it out a little further. Now we're all the way out to June before the polls even show that that will be the first potential rate cut. I don't see any rate cut because I don't see employment numbers dropping sharply. Now, we got some employment data numbers last week, of course. Initial claims, we get them every Thursday. Unemployment insurance, initial claims and continuing claims. Initial claims, I've got the chart here. I'll show you in just a second. But basically, the poll we're looking here is that even in June, the likelihood is shrinking. Here are some of the things I'm looking at. Core inflation versus expenditures. Personal expenditures. How much does personal expenditures drive the economy? Now you got the major areas: business, government, and personal. Consumers. If the rate of growth of incomes moves upward or downward, you will see expenditures moving about the same. Now, as you can see by this, as expenditures move, so does inflation. We're seeing expenditures moving higher. Wouldn't it be realistic to believe that inflation will do exactly the same thing? Last week's number on inflation, month over month, 0.4. It was just shy of that, about 0.38 or something like that. Multiply that by 12, that 0.4 by 12. That's 4.8 without compounding. That's nowhere near 2%. We need to see drastic drop in month over month increases in inflation for the Federal Reserve to say we are definitely on track to hitting 2%. Right now, we are nowhere near being on track to hitting 2%. Then you look at employment numbers and you start to see that they're kind of very robust. Here, producer price index popped up a little bit over month over month. This hit last week, and I kind of looked at it and said, okay, it's 1.89%. That's not a pop higher. It really wasn't that big of a deal. I shrugged it off entirely. But here's your initial claims. Now, some could say this is elevated, but this isn't a historical look. We're at unemployment numbers that are near all-time highs. And so losing some in initial claims is you're going to lose some through attrition. Here's continuing claims, popped a little higher. One economic data point does not make an economy. I want to see a lot more numbers on continuing claims, because when you look at this, frankly, where did the continuing claims number come from? Initial claims certainly are not moving higher. But here's a more historical look at continuing claims. This goes all the way back to 1990. Total numbers, all right? Mind you, 1990, we had what, about 150 to 175 million people in the United States. We have double that now. Yet our continuing claims numbers are roughly on the low end. So I don't see this from a proportional perspective as being high, even though, yeah, we saw a pop higher in continuing claims this week. This is nowhere near a red flag recessionary number. Here's your look at the US 10-year Treasury yield. Now, I always defer to the 10-year because it's sort of the benchmark for all investments. And we're sitting at 4.26%. Moved up a little bit higher. I don't expect it to jump any higher, and that's why I'm stepping in on TLT stock and selling puts, because I do expect that the NVIDIA number could easily come in kind of mushy. We'll see how it plays out. Nonetheless, and if I see what I'm looking for, yeah, I'll step in and I'll sell those puts, because I think we're probably at an appropriate level for Treasury yields right now. Given that, I think those TLT stock puts would expire worthless, which is usually my strategy. Here's a look at TLT stock. Again, the ETF for the 20-year Treasury. I'm probably going to step in and sell 90 puts. Plenty of room. The money, I think I saw a quote on 13 cents. All right. I expect that to expire worthless. That's kind of free money to me. And I'm constantly stepping in and doing small trades here and there. And maybe I sit on it for 2-3 days or maybe 6 days and let it expire entirely worthless. Or maybe what I do is once we get an economic data and I see a big jump, I'll go ahead and take as much of the profits as I can, and just get out of the trade and look for my next. The reason why is with stock options, you really have to take your money and run. And that's a lesson I've learned over 30 plus years of trading. When you're sitting on profits and it's a stock option, take that money and run. For me, given the economic data that we're looking at right now, I think stepping in, selling 90, 91 puts with a short-term expiration date, maybe next Friday, probably pulling in anywhere from, say, 11 to 15 cents. If I got 13 cents and I sold those options, I expect they expire worthless. Then I'm looking for my next trade. I know it's a short-term thing, but that's how I trade these. And if I sold something at 13 and all of a sudden I got an 8-cent run, I'd probably get out real fast. That's how I'm playing TLT stock. If this is the kind of content you're looking for, make sure to hit that like and follow button. Channel's been growing really rapidly. Thanks so much. We'll see you in the next video.